Your credit score is a three-digit number that controls almost every major financial decision in your life. It determines whether you get approved for a mortgage, what interest rate you pay on a car loan, whether your rental application gets accepted, and in some states, even whether you get hired for a job. A difference of just 100 points on your credit score can cost you or save you tens of thousands of dollars over the course of your lifetime. Yet most people have no idea what their credit score actually is, let alone how to improve it. In this video, I'm breaking down the exact 5 strategies that can raise your credit score by 50, 100, or even 150 points, and some of these can start showing results in as little as 30 days. I've seen people go from a 580 score, which is considered poor credit, all the way to 720 and above in under a year, using these exact methods. Whether you're starting from scratch, recovering from financial mistakes, or just trying to get from good to excellent, this video is going to show you exactly what to do. Stay until the bonus tip. That one alone could add 30 to 50 points to your score. Before we dive into the strategies, let me explain why this actually matters so much. Your credit score has 5 components, and understanding each one is the key to improving your score efficiently. The first and biggest factor is payment history. That's 35% of your total score. Simply paying your bills on time, every time, is the single most powerful thing you can do. The second factor is credit utilization, how much of your available credit you're using, and that accounts for 30% of your score. Combined, these two factors make up 65% of your total credit score. The remaining 35% comes from the length of your credit history, the variety of credit types you have, and the number of recent hard inquiries on your account. Here's what makes credit scores so interesting and so frustrating at the same time. The actions that damage your score happen instantly, but the actions that build your score take time and consistency. A single missed payment can drop your score by 50 to 100 points overnight, but that same 50 to 100 points can take 6 to 12 months to rebuild. This asymmetry is why it's so important to be proactive, and why I want to give you a complete system, not just random tips. Payment history makes up 35% of your credit score. It is the single most important factor. This means that paying every single bill on time, every single month, is the foundation of a great credit score. Not mostly on time, not usually on time, every time. A single missed payment reported to the credit bureaus can drop your score by 50 to 110 points, depending on your current score and how long it stays delinquent. Payments 30 days late are reported to credit bureaus and stay on your report for 7 years. Payments 60 or 90 days late are even more damaging. Here is the practical fix. Set up automatic minimum payments on every single credit account you have. You don't have to pay the full balance automatically. Just set up the automatic minimum to make sure the account is never reported as late. Then pay whatever additional amount you can afford manually each month. If you have any past missed payments on your credit report, time is the main healer. But you can also try writing a goodwill letter to the creditor, asking them to remove the late payment mark as a courtesy, especially if it was your first offense and you've been a good customer otherwise. Many creditors will agree to remove it. This is called a goodwill deletion, and it can be surprisingly effective. I've heard from people who raised their score by 40 to 60 points just by successfully getting a few late payment marks removed through goodwill letters. Credit utilization is the second biggest factor in your score, making up 30% of your total. Credit utilization is simply how much of your available credit limit you are using at any given time. For example, if you have a credit card with a $5,000 limit and you have a $2,500 balance on it, your utilization on that card is 50%, and that is too high. The general recommendation is to keep your credit utilization below 30%. So on a $5,000 limit card, you'd want your balance to be below $1,500. But here's what most people don't know. For the highest possible credit scores, we're talking 750 and above, you should actually aim for utilization below 10%. The good news is that credit utilization can be improved very quickly compared to other factors. There are 3 ways to lower your utilization. First, pay down your existing balances. This is the most straightforward approach. Second, ask your credit card company for a credit limit increase. If they increase your limit and you keep your spending the same, your utilization percentage drops instantly. Third, pay your credit card balance twice a month instead of once. Credit card companies report your balance to the credit bureaus on your statement closing date. So if you pay down the balance before your statement closes, they report a lower utilization. Timing your payments strategically around your statement dates can make a significant difference in your reported utilization, even if your actual spending doesn't change. The length of your credit history accounts for 15% of your score, and this is where a very common and costly mistake happens. People close old credit card accounts, often because they want to simplify their finances, or because they're not using the card anymore, or because the card has an annual fee. And while those reasons sound sensible, closing an old credit card can significantly hurt your score in 2 ways. First, it reduces the average age of your credit accounts. If you've had a card for 10 years and you close it, that history eventually drops from your report, pulling your average account age down. The older your average account age, the better for your score. Second, closing a credit card reduces your total available credit, which automatically increases your credit utilization percentage. Say you have 2 cards, one with a $3,000 limit, one with a $2,000 limit. You carry $1,500 total across both. Your utilization is 30%. Now you close the $2,000 limit card. Your utilization instantly jumps to 50%, and your score drops accordingly, even though your spending didn't change at all. The practical advice here is simple. Keep old credit accounts open, especially if they have no annual fee. If you have an old card you don't use, put a small recurring subscription on it, a Netflix or Spotify charge, and set up automatic payment. This keeps the account active and aged, which benefits your score continuously. Every time you apply for new credit, a new credit card, a car loan, a mortgage, a personal loan, the lender typically does what is called a hard inquiry on your credit report. A hard inquiry is a formal request to review your credit file. Each hard inquiry can reduce your score by 5 to 10 points, and multiple inquiries in a short period signal to lenders that you may be in financial trouble or taking on too much new debt. Hard inquiries stay on your credit report for 2 years, though their impact on your score lessens significantly after the first year. The practical rule here is simple. Only apply for new credit when you genuinely need it, and try to space out your credit applications. Avoid opening multiple new accounts in a short window of time just to get sign-up bonuses or take advantage of promotional offers. There is, however, an important exception to be aware of. When you are rate shopping for a mortgage or an auto loan, multiple hard inquiries from different lenders within a 14 to 45-day window are typically counted as a single inquiry by the credit bureaus. So shopping around for the best mortgage rate will not hurt your score the way that opening 5 credit cards in 1 month would. Be strategic about when and why you apply for new credit. One of the most overlooked ways to improve your credit score is to check your credit report for errors and to dispute any errors you find. Studies have shown that approximately 1 in 5 Americans has an error on at least one of their credit reports. These errors can include accounts that don't belong to you, incorrect payment statuses, duplicate accounts, wrong personal information, or accounts that should have been removed but weren't. The Federal Fair Credit Reporting Act gives you the right to a free credit report from each of the 3 major bureaus, Equifax, Experian, and TransUnion, once per year through annualcreditreport.com. I recommend checking all 3 because the information can differ between bureaus, and a negative item may appear on one but not the others. If you find an error, you can dispute it directly with the credit bureau online, by mail, or by phone. The bureau is required to investigate the dispute within 30 days and must remove the item if it cannot be verified. Many disputes are resolved successfully, and having a negative item removed, even a legitimate one that was reported incorrectly, can give your score a meaningful boost. Start by pulling all 3 reports today. It takes about 15 minutes, and the potential upside for your credit score is significant. Here is the bonus tip that most people have never heard of: the authorized user strategy. An authorized user is someone who is added to another person's credit card account and receives access to use that card, but without the legal responsibility to pay the bill. The account's full history, including the credit limit, payment history, and age of the account, shows up on the authorized user's credit report as if it were their own. This means that if a parent, sibling, spouse, or trusted friend adds you as an authorized user on an old credit card with a high limit and a perfect payment history, your credit score can see a significant and immediate improvement. I have seen authorized user strategies add 30 to 80 points to someone's credit score within a single reporting cycle, which is typically about 30 days. You don't even need to use the card or receive the physical card in the mail. Just being listed as an authorized user is enough. Conversely, if you have strong credit yourself, adding a family member who is building credit as an authorized user on your account is one of the kindest financial gifts you can give them. It costs you nothing as long as they don't actually use the card, and the benefit to them can be enormous. Here is your complete action plan, and I want you to do these things today. Not tomorrow, not this weekend, today. Step 1. Pull your free credit reports from all 3 bureaus at annualcreditreport.com. Spend 15 minutes reviewing them for errors. Step 2. Set up automatic minimum payments on every credit card and loan you have. Log into each account and enable autopay right now. This single step protects your payment history going forward. Step 3. Calculate your credit utilization on every credit card. If any card is above 30% utilization, make a plan to pay it down or call the card company and request a credit limit increase. Step 4. Look at your oldest credit card. If it has no annual fee, keep it open and active. Put a small recurring charge on it if needed. Step 5. Check if there is a trusted family member who would add you as an authorized user on one of their older high-limit cards, or offer to add a family member to yours. These 5 steps can be completed in under an hour, and taken together, consistently executed over the next 3 to 6 months, they have the potential to raise your credit score by 50 to 150 points. A higher credit score saves you money on every loan, every mortgage, and every financing decision you make for the rest of your life. The time investment pays for itself thousands of times over. Let's do a quick recap of everything we covered today. First, payment history is 35% of your score. Set up autopay immediately so you never miss a payment. Second, credit utilization is 30%. Keep it below 30%, ideally below 10%. Third, don't close old credit accounts. The age of your accounts matters. Fourth, limit hard inquiries. Only apply for credit when you truly need it. Fifth, check your credit reports for errors and dispute anything inaccurate. And the bonus, consider the authorized user strategy to give your score a quick boost. If this video helped you understand your credit score better, please hit that like button right now. It helps this channel reach more people who need this information. Subscribe to FinanceNorthStar for practical personal finance tips every week. And drop a comment below. What is your current credit score range? And which of these strategies are you going to try first? I read every single comment. See you in the next one.